Most people spend their entire lives chasing a number they never actually defined, and when they finally reach it, they discover it was never about the number at all. If you value clarity over chaos and rational thinking over emotional spending, consider subscribing to this channel where we explore the financial wisdom that actually compounds over time. You've probably asked yourself at some point, especially if you're in your 40s, 50s, or beyond, how much money do I really need to feel secure? Maybe you've looked at your retirement account after a market downturn and felt that cold wave of panic wash over you. Maybe you've watched colleagues with higher salaries somehow end up more stressed, more leveraged, and more trapped than you ever imagined possible. The truth is that most Americans have constructed their financial lives around a moving target that keeps shifting further away the closer they get to it. They tell themselves that once they hit $1 million, they'll finally relax. Then the million becomes 5 million. Then 5 becomes 10. And somewhere along that treadmill, they realize they've been running toward a mirage that was never real to begin with. Charlie Munger understood something that most people never grasp in their entire lifetime. The game of money isn't about reaching a specific number. It's about reaching a specific state of mind. It's about control, not over markets or returns, but over your own time, your own obligations, and most importantly, over your own psychology. When your money owns you, when you wake up at 3 in the morning calculating whether your portfolio can sustain your lifestyle, you're not wealthy. You're just well decorated with assets that quietly control every decision you make. Munger met people throughout his long career who had $10 million and couldn't sleep at night, men who constantly checked their accounts, who panicked at every market fluctuation, who lived in perpetual anxiety about losing what they'd spent decades accumulating. And he also met people with $200,000 who slept peacefully, who enjoyed their days, who felt no compulsion to impress anyone or prove anything to the world. The question Munger would ask is simple and devastating. Which person is actually richer? Not in portfolio value, but in the only currency that ultimately matters, which is peace of mind. If you're over 40, you've likely experienced enough financial ups and downs to know that comfort doesn't actually come from the size of your bank account. It comes from not being stupid with the account you have. You can be relatively modest in your means and still live with profound peace if you've structured your life to avoid the idiotic mistakes that destroy most people financially. You can also be objectively rich by any numerical standard and live in absolute misery if you're constantly chasing status, constantly comparing yourself to others, constantly upgrading your lifestyle to match some imagined standard of success that exists only in your anxious mind. Modern American culture has deliberately confused comfort with consumption, and that confusion is bankrupting millions of people who should be financially secure by now. The middle class wants security, which is rational and achievable, but then they buy luxury items they don't need, financed with debt they can't afford, to impress neighbors who aren't even paying attention. Meanwhile, the wealthy often want freedom, which is also rational and achievable, but then they chain themselves to the appearance of wealth, building lifestyles that require constant earnings just to maintain the image. Both groups end up broke in different ways. One broke in their bank account, the other broke in their spirit, trapped by obligations they created for themselves. What financial mistake taught you your most painful lesson? Share it below, because honest reflection on past errors is how we build better financial judgment going forward. If you think you need $10 million to live well, Munger would tell you that you've already lost the game before you even started playing it. Because what you've really done is build a lifestyle that depends on a treadmill you can never step off. The right question for anyone approaching or living through their retirement years isn't how much money is enough. The right question is how much stupidity can you remove from your financial life starting today? Because once you stop doing genuinely dumb things with your money, wealth has a way of taking care of itself through the magic of compounding in time. People make their financial lives so much harder than they need to be. They buy things they don't actually need to impress people they don't even like with money they don't really have. That's not ambition or success. That's insecurity wearing expensive clothes and driving a leased car. When Munger was young, he watched plenty of people make money fast during various booms and bubbles. Almost every single one of them found a way to lose that money just as fast during the inevitable correction. It wasn't bad luck or unpredictable market forces. It was bad behavior. They couldn't sit still. They couldn't tolerate boredom. They had to chase the next thrill, the next hot stock, the next real estate flip, the next get-rich scheme that promised to multiply their wealth overnight. In markets and in life, the inability to do nothing is absolutely fatal to your financial health. Here's a rule that's worth remembering as you plan your remaining decades. You don't need to get rich twice. The first time is hard enough. The second time means you were stupid enough to lose what you already built. People love talking about financial independence, especially as they approach retirement age and start seriously thinking about what their post-work life might look like. But most of them actually want independence from responsibility, not from dependence on income. They dream of passive income streams while maintaining completely active stupidity in their spending and lifestyle choices. True financial independence, the kind that lasts through market crashes and inflation and health emergencies, is simply the ability to live meaningfully below your means without feeling deprived or diminished. That's the foundation of everything. Everything else beyond that is just decoration and status signaling. Munger wasn't against wealth. He spent a lifetime helping to create enormous amounts of it. But it was always wealth for a purpose, never wealth for show. There's a fundamental difference between being rich and being wealthy. Rich is just a number on a statement. Wealthy is a mindset, a way of thinking about resources and time and obligation. Rich buys yachts and vacation homes. Wealthy buys time and freedom and the ability to say no to nonsense. If you can wake up when you want, work with people you genuinely respect, and say no to things that don't serve your values, you've won the entire game, whether your net worth is $50,000 or $50 million. But most people will never believe that simple truth. They think freedom requires a fortune. They think peace requires possessions. They think happiness is perpetually just a few more dollars away, just one more promotion, just one more good year in the market. That's the grand illusion that captures and destroys most people financially. It's the constant postponement of satisfaction. You tell yourself you'll finally relax and enjoy life when you reach the next milestone. Then you reach it, and immediately the goalpost moves again. And eventually, if you're not careful, you die still chasing that next milestone that was always just out of reach. Munger saw this pattern play out across his entire long life. Investors, executives, doctors, lawyers, genuinely brilliant people who spent 40 years climbing the corporate or professional ladder with impressive discipline, only to realize at the end that the ladder had been leaning against the wrong wall the entire time. Money doesn't fix that fundamental mistake. It just gives you a better view from the wrong ladder, a nicer office in a life you didn't actually want. Real wealth begins when you stop measuring it by digits on a screen. It starts when you stop needing external validation from your portfolio, your house, your car, or your neighbor's opinions. The market doesn't care how smart you look. The world doesn't owe you admiration. And your bank account absolutely does not define your worth as a human being. Your behavior defines your worth. Your character defines your legacy. You can live genuinely well with a modest fortune if you have discipline and perspective about what actually matters in life. You can live poorly with a financial empire if you have envy and ego driving your decisions. Munger called this the paradox of prosperity, and it's something everyone over 40 should deeply understand. People spend their youth trading time for money, working endless hours, sacrificing relationships and health and presence with their children. Then they spend their old age desperately trading money for time, paying for convenience, paying for health, paying to try to recover what they lost. They could have skipped that entire painful loop by learning early what actually matters most. Munger wasn't saying that poverty is noble or that struggling financially is virtuous. He was saying that extravagance is genuinely foolish, that it robs you of the very freedom you thought you were building. Between the extremes of poverty and extravagance lies something wonderful and accessible. Enough. Enough means you don't wake up in the middle of the night and panic about money. Enough means you don't worship luck or constantly check market tickers. Enough means you can think clearly about life without the constant noise of greed and fear competing for your attention. But modern consumer culture absolutely hates that word. Enough doesn't sell products. It doesn't trend on social media. It doesn't make your neighbor jealous or make you feel superior. So people ignore it completely and end up as slaves to excess, working to maintain lifestyles that bring them no actual joy. Munger was telling us this as someone who genuinely saw both sides of wealth. He and Warren Buffett built one of history's great fortunes at Berkshire Hathaway, not by chasing fantasies or gambling on trends, but by methodically avoiding idiocy year after year, decade after decade. They didn't need 20 mansions scattered across the globe or 5 yachts or private jets for every day of the week. They just needed peace of mind and the ability to keep playing the rational investing game for as long as possible. The game isn't about getting rich through some brilliant strategy. It's about staying rational long enough to let compounding do its inevitable mathematical work. And you cannot stay rational if you're constantly craving more, constantly comparing yourself to others, constantly feeling behind no matter what you achieve. So start by asking yourself a much simpler and more actionable question than how much do I need? Ask yourself, how much stupidity am I willing to eliminate from my financial life today? Because that's where real wealth actually begins, in subtraction rather than addition, in removing the foolish behaviors rather than adding more complex strategies. The fundamental problem for most Americans over 40 isn't that they don't make enough money. Most people in this age range have had decades of decent earnings. The problem is they genuinely don't know what to do with money once they have it. Give an average person $50,000 and they'll buy temporary comfort that fades quickly. Give them $500,000 and they'll buy complication, more accounts, more advisors, more products they don't understand. Give them $5 million and they'll buy outright stupidity, bad investments, family conflicts, lifestyle inflation that never ends. The genuine tragedy of modern American life is that the more people earn, the less clearly they think about money. They don't study risk management or tax efficiency or asset protection. They study lifestyle upgrades. They don't ask themselves, how can I protect the capital I've built? They ask, what car fits my new salary bracket? That's not financial progress or maturity. That's financial adolescence at age 50. People love to say they're investing in themselves, which usually means buying something expensive they'll regret within 6 months. The brain craves novelty and excitement. The wallet pays the long-term price for those cravings. Munger watched this pattern play out since the 1950s, when America built a genuine middle class based on discipline and high savings rates. Then over the following decades, that same middle class was slowly destroyed by credit cards, keeping up with the Joneses, and ego-driven spending. Television and then social media told people what success was supposed to look like, and they bought that manufactured image one installment payment at a time. You cannot compound wealth if you're constantly busy compounding payments on depreciating assets. Many people claim they're working hard for freedom and independence. In actual truth, they're just methodically financing their own captivity. Every upgrade, whether it's a new car, a bigger house, or nicer vacations, quietly becomes an obligation that you have to keep servicing. And the accumulated weight of those obligations is precisely what keeps people running in exhausting circles well into their 60s and 70s. They're not free at all. They're leveraged to the maximum, one job loss or medical emergency away from serious trouble. This brings us to a critical insight that defines everything Munger believed about money and life. You cannot talk honestly about financial freedom without talking honestly about restraint and discipline. Discipline is the absolute foundation of lasting wealth. Not talent, not timing, not luck, just the profoundly boring habit of not being an idiot with your resources year after year. But that's not a popular or marketable message in American culture. People desperately want a secret formula, a hidden strategy that the wealthy use but don't share. They want the shortcut that somehow turns average income into luxury living without sacrifice. They don't want to hear that the real shortcut, the only one that actually works over decades, is just consistently avoiding debt, saving early in life, investing in understandable assets, and letting compounding do its mathematical job without interference. Every generation believes it's somehow smarter and more sophisticated than the one that came before it. And every single generation proceeds to repeat exactly the same financial mistakes with slightly different terminology. Munger watched people chase the next hot stock during every market bubble. He watched them pile into real estate booms assuming prices could only go up. He watched them throw money at cryptocurrency schemes believing this time the old rules didn't apply. They call it innovation and progress. He called it sophisticated greed wearing new clothes. The faces and technologies change across generations. The underlying stupidity remains remarkably consistent. Which of Munger's principles do you find hardest to apply consistently in your own financial life? Let's talk honestly in the comments, because recognizing our weak points is the first step toward strengthening them. You want to know the biggest financial trap that destroys people in their 40s, 50s, and 60s? It's comfort. The moment people get a genuine taste of a better lifestyle, they start confusing comfort with success and happiness. They call it rewarding themselves, as if overspending were somehow an achievement worth celebrating. Munger observed this pattern play out consistently over 70 years of watching human behavior. It's always the same predictable sequence. Income rises significantly, humility quietly vanishes, and stupidity enters through the door that discipline just walked out of. First they upgrade their car because they deserve something nice. Then they upgrade their house because the old one suddenly feels inadequate. Then they upgrade their expectations about what life should provide them, and that's the real inflation that nobody measures or talks about honestly. Expectation inflation. When your expectations rise faster than your actual earnings, you will never feel rich or secure, no matter what you make or accumulate. You could be earning $200,000 annually and still be functionally broke because you've built a lifestyle that needs $300,000 just to sustain itself without cutting back. Lifestyle inflation is just a polite academic term for financial self-sabotage. You don't see the damage immediately because it accumulates slowly, but over time every upgrade becomes a shackle around your freedom. A bigger house means higher property taxes, more maintenance costs, more furniture to buy, more space to heat and cool, more clutter to manage. A fancy car means more insurance, more expensive repairs, more stress when someone inevitably scratches it in a parking lot. The deep irony that most people miss is that every purchase meant to bring joy and satisfaction usually ends up bringing anxiety and obligation instead. You cannot enjoy genuine freedom when your possessions own you rather than you owning them. You're not living better. You're just managing more stuff, more accounts, more maintenance schedules, more things that can break. People talk constantly about wanting financial freedom while simultaneously building lifestyles that require permanent servitude just to maintain. That's not freedom by any rational definition. That's golden slavery, and it's entirely self-imposed. Let me state this bluntly for anyone approaching or living through retirement. If you need to keep earning at an intense pace just to sustain your public image and lifestyle, you're not successful. You're trapped in a cage you built yourself. The world aggressively sells the illusion that comfort and happiness scale linearly with spending. They don't, not past a fairly modest point. Every extra dollar you spend buys progressively smaller returns in actual satisfaction and progressively larger risks to your independence and flexibility. Munger met successful men who owned everything material you could imagine and enjoyed absolutely nothing about their lives. They spent their remaining days managing an endless stream of problems created entirely by their own appetite for more. Every luxury added another layer of obligation and complexity. And the more obligations you accumulate, the less flexible your life becomes. Flexibility is real wealth. When you can walk away from nonsense, when you can say no without fear, you're genuinely richer than the person with $10 million tied up in status symbols and social obligations. But try explaining that truth to someone who just financed a lifestyle upgrade. They'll insist they're investing in happiness and quality of life. That's just marketing language for digging a hole I'll regret later when the bills come due. Here's what nobody tells you honestly when you're building wealth in your working years. Every dollar you choose not to spend has genuine compound value over time. Every habit of restraint multiplies quietly in the background. Every unnecessary purchase steals a piece of your future freedom. The mathematics are simple but absolutely brutal when you actually run the numbers. Spend $500 monthly on things you don't really need, and you're burning $6,000 annually, $60,000 over a decade. Invest that same amount consistently instead, and compounding can turn it into hundreds of thousands of dollars by the time you need it most. That's the quiet invisible difference between people who end up comfortable in retirement and people who end up desperate, still working in their 70s. But most people don't see this trade-off clearly because it's invisible in the moment. They only notice the fun or status they're missing today. They don't notice the freedom and security they're losing tomorrow. Discipline feels like sacrifice and deprivation until compounding suddenly makes it look like genius decades later. If you can't maintain happiness with modest comfort and simple pleasures, you'll never maintain happiness with excess and luxury. You'll just scale your misery to a higher income bracket. Munger watched people upgrade from a Honda to a Rolls-Royce and somehow downgrade their peace of mind in the process. Turns out the expensive car runs fine, but the driver's brain starts leaking sanity and perspective. Freedom isn't actually about retiring early to some beach house or traveling the world in luxury. It's about reclaiming your time, your mental focus, and your daily choices. When your income comfortably covers your life without generating anxiety, you're wealthier than 90% of people on the planet. But we're trained not to notice or appreciate that. Advertising and social comparison make us functionally blind to what we have. They sell us the idea that life is a contest of consumption and display. It's not. It's a long-term test of self-control and rational thinking. So the simple mathematics of freedom work like this. Earn enough to cover your real needs, not your imagined wants. Spend far below your means consistently. Invest the surplus in assets that don't keep you awake at night worrying. Repeat that boring pattern for 20 or 30 years without deviation. It's decidedly unglamorous. It's slow. It's the most effective wealth-building machine ever invented by human beings. But very few people can actually execute it because very few can sit still long enough to let boring arithmetic turn into quiet freedom. People consistently overestimate the importance of intelligence and underestimate the importance of discipline in building wealth. They think financial success is about IQ, perfect timing, or lucky breaks. It isn't. It's about temperament and behavior sustained over decades. Munger met geniuses throughout his career who couldn't stay solvent. They could quote economic theory but couldn't balance a checkbook. Their problem wasn't lack of intelligence. It was consistently bad behavior. In investing and in life, behavior beats brilliance every single time. You don't need to be extraordinary or possess some rare gift. You just need to be consistently reasonable for longer than most people can manage. But reasonable doesn't generate excitement. Discipline doesn't trend on financial media. And patience rarely makes headlines or gets celebrated. That's why the modern world keeps producing clever failures, people with impressive credentials who somehow can't build lasting wealth. Wealth doesn't reward excitement or activity. It rewards endurance. The market pays people who can sit completely still while everyone else panics, speculates, or chases trends desperately. Most people cannot do that. They think activity equals progress. In reality, unnecessary activity equals friction that erodes capital, just like water erosion slowly wears down solid rock. When Munger talked about discipline, he wasn't talking about elaborate spreadsheets or strict budgets that account for every dollar. He was talking about mental clarity, the ability to say no 10 times more often than you say yes. Discipline is simply sustained rationality over time. And sustained rationality is rarer than diamonds in human behavior. Look at any long-term winner, not just in investing but in any field that rewards consistency. The pattern is remarkably similar. They made a few genuinely important decisions correctly. Then they avoided stupidity for decades. That's the whole formula. No secret sauce, just a stubborn refusal to self-destruct when everyone around them was losing their minds. Berkshire Hathaway was built on exactly this philosophy. Munger and Buffett didn't chase every deal that crossed their desk. They waited patiently for obvious opportunities, sometimes for years at a time. The waiting itself made them wealthy. Everyone wants their results. Almost nobody wants to adopt their patience. The irony is that discipline doesn't require suffering or deprivation. It just requires tolerance for boredom. But modern American culture has cultivated zero tolerance for boredom. People would rather lose money than feel unstimulated for an afternoon. They call it staying active and engaged. Munger called it financial self-sabotage dressed up in acceptable language. Here's how discipline actually works in practice. You decide clearly what game you're playing with your money and your life. You define precisely what winning looks like for your specific situation. And then you ignore everything else that doesn't serve that definition. If you don't explicitly define your own game, you'll end up playing someone else's game, usually a foolish one designed to benefit them. In money, the absolute dumbest game is envy, trying to outspend or outinvest or outshine other people. That's how intelligent people quietly destroy themselves financially. Munger watched brilliant doctors, successful lawyers, and corporate CEOs turn their lives into debt factories just to maintain appearances and keep up with their peer group. They weren't greedy by nature. They were weak. They couldn't tolerate the idea of looking less successful than their neighbors or colleagues. The inability to ignore what other people think and do is one of the most expensive habits on earth. Discipline fixes that weakness. It teaches you to think independently, to make decisions based on arithmetic rather than applause. You'll notice something interesting when you start living that way. The world stops making intuitive sense to you. People celebrate financial behaviors that actually make them poorer. They cheer for risks they don't understand and laugh at caution they desperately need. Don't join them. Being different isn't arrogance. It's survival. The real game is endurance, not speed. People always ask what's the key to long-term financial success. Munger would tell them don't interrupt compounding unnecessarily. That's another way of saying don't do something stupid just because you're bored or anxious. The world is full of intelligent people who can't resist sabotaging themselves at the worst possible time. They get greedy during boom markets, fearful during inevitable corrections, and restless during the boring periods in between. Discipline is what keeps you from joining that parade of fools who repeat the same mistakes every market cycle. It's the ability to stay logical and calm while everyone else is emotional and panicked. It doesn't mean you'll never make mistakes. It means you'll make fewer mistakes and you'll survive them when they happen. Survival is profoundly underrated in investing. People chase growth and returns obsessively, but they forget that survival is the absolute prerequisite to growth. You cannot compound wealth that doesn't exist anymore because you blew it up chasing excitement. Here's a practical test for anyone reading this. If you can sit through a market crash without panic selling your positions, if you can go an entire year without upgrading your lifestyle when you get a raise, if you can reinvest dividends instead of spending them on something forgettable, you're already ahead of 90% of investors. Discipline is cumulative. Every rational decision you make strengthens the neural pathway for the next one. Eventually your entire life becomes a compounding machine, not just your investment portfolio, but your habits, your judgment, your peace of mind. That's how wealth quietly builds itself over decades. Not with genius moves, but with relentless consistency. Not with boldness, but with restraint. The market doesn't reward brilliance. It rewards endurance wrapped in humility. The tragedy that Munger observed over and over is that most people can't endure prosperity. They think making money proves they're smart, and that arrogance eventually wipes them out. The truth is brutally simple. To get rich initially, you need discipline once. To stay rich for the rest of your life, you need that same discipline forever. The fastest way to destroy accumulated wealth isn't a market crash. It's comfort and complacency. Once people taste a genuinely better lifestyle, they start confusing that comfort with happiness and success. They stop asking how can I make my life efficient and start asking how can I maintain this comfort level forever regardless of whether it makes sense. That's the addiction nobody talks about openly. Not alcohol or drugs or gambling. Comfort itself. It kills ambition quietly and makes you rationalize mediocrity and foolish spending. Which principle from today's lesson will you commit to applying starting right now in your financial life? Share your commitment below, because public accountability helps us follow through on what we know we should do. Financial freedom, the kind that lasts through your retirement years and beyond, isn't mystical or complicated. It's just mathematics. You can live well, not extravagantly but genuinely well, on a modest fortune if you think clearly and avoid stupidity. $500,000 can literally buy freedom for the rest of your life if you handle it the way a rational adult handles fire, with respect and caution. Here's the straightforward logic. Put $500,000 into conservative investments. Government bonds, high-quality dividend stocks, diversified index funds, whatever lets you sleep at night. A 5% annual return generates $25,000. A more optimistic but still reasonable 7% return generates $35,000 annually. That's it. No miracle required. No genius strategy needed. Just basic arithmetic and patience. Now, the average American hears those numbers and immediately panics. I can't possibly live on $35,000 a year. But that reaction reveals everything. It reveals they've built a lifestyle that requires permanent adrenaline and maximum earnings to sustain. If your definition of comfort includes constant consumption and status display, you've completely misdefined what comfort actually means. The truth is that in most parts of America, $35,000 annually is enough to live peacefully if you own your home outright, you've eliminated debt completely, and you've stopped trying to impress people who don't matter. It's not glamorous by social media standards. It won't make impressive vacation photos. But it's fundamentally sane, and sanity doesn't get nearly enough credit in financial planning. The best investment strategy is the one you can stick with consistently while half the world loses its mind every few years. The same principle applies to your spending habits. If you need constant external excitement to feel alive and validated, your bank account will always suffer. The real game is endurance, not speed. Freedom means your basic life continues quietly and predictably even if the market closes for 5 years. You sleep the same whether interest rates go up or down. You don't compulsively check your net worth every morning because your self-worth isn't tied to those numbers. That's the kind of mathematics Munger cared about deeply. Not impressive returns, but durable security. Compounding is genuine magic, but only for the patient few. Everyone else treats it like gambling, interrupting it constantly whenever they get bored or scared. Warren Buffett once said it's not about being smarter than everyone else. It's about being more rational for longer periods of time. He's absolutely right. They got genuinely rich by sitting still and thinking clearly, not by jumping off cliffs or making dramatic moves. If you think you're too smart for steady returns, the market will eventually humble you. And if you think you're too rich to care about small percentages, inflation will quietly eat you alive over decades. The difference between wealth and freedom is that wealth without discipline inevitably decays. Freedom without restraint collapses. People consistently underestimate what modest capital can accomplish when it's paired with unwavering consistency. $500,000 invested soundly and managed rationally beats $10 million managed emotionally every single time. Because when fear and greed control your decisions, mathematics doesn't matter anymore. Only behavior matters. Preserving capital isn't about hiding cash under your mattress. It means structuring your entire financial life so you never have to sell assets in a panic during crashes. If your expenses are genuinely low and your patience is genuinely high, you can wait out any economic storm. That's real power. Not the ability to predict markets, but the ability to endure them psychologically. Everyone wants higher returns. Very few actually deserve them because higher returns require either higher intelligence, higher discipline, or both. Most people lack sufficient quantities of either. That's why Munger preferred boring investments. Businesses that made intuitive sense. Products people would still need in 30 years. Balance sheets that could survive a depression. Boring keeps you alive and compounding. Excitement makes you broke and regretful. Capital preservation is fundamentally about humility. It's accepting that you're not omniscient, that unexpected events happen, and that the world doesn't care about your optimism or plans. When you focus on preserving capital, you preserve optionality, the valuable right to act decisively when everyone else is paralyzed by fear. That's how real fortunes are actually built. Not in bull markets when everyone's a genius, but in crashes when cash becomes the most valuable asset on earth. In times of panic, people sell what they should hold and hold what they should sell. Munger and Buffett bought what others were desperately dumping. That wasn't courage. That was preparation meeting opportunity. You can't be greedy when others are fearful if you're also broke when others are fearful. So keep cash available. Keep patience abundant. Keep humility strong. Those are the assets that compound longest across your lifetime. The older Munger got, the more convinced he became that complexity is actually a form of stupidity. Not the loud obvious kind, but the quiet insidious kind that hides behind jargon and credentials. People love making things complicated because it makes them feel intelligent and important. In reality, it usually just proves insecurity. Simplicity isn't ignorance. It's clarity. It's what remains after you've filtered out all the nonsense. In investing, in business, and in life, the smartest people Munger ever met were the ones who made decisions you could explain to a child. If your reasoning requires a PowerPoint presentation, it's probably bad reasoning built on shaky foundations. Berkshire Hathaway was built on radical simplicity. They didn't need quantum algorithms or 20 analysts with advanced degrees. They just bought understandable businesses at reasonable prices and let time do what it always does. Compound quietly. Simplicity also applies directly to lifestyle. People complicate their lives until they can't breathe freely. Too many possessions requiring maintenance. Too many commitments consuming time. Too much noise preventing clear thought. Then they call that chaos success. If your calendar owns you, you're not successful. You're employed by chaos you created. Freedom lives in simplicity. The fewer moving parts, the fewer things that can break. That applies to investment portfolios and to marriages. If your solution to any problem requires elaborate adjectives, it's probably wrong. Good decisions are simple nouns and verbs. Clear, strong, boring. People laugh when you say boring. They think it means dull. In truth, boring just means stable repeated competence. And that's precisely what compounds over time in capital, reputation, and wisdom. People always want more. It's the default factory setting of human nature. More money, more recognition, more everything. But more is a disease with no cure, only management. You never see anyone overdose on enough. It's always the pursuit of more that eventually destroys them. Munger lived long enough to watch rich men completely ruin themselves because they couldn't stop playing the game after they had already won decisively. They thought just one more deal would finally bring peace. It didn't. It brought chaos and complications. Peace doesn't scale upward. Once you have enough, anything extra is just noise that distracts from what matters. The world keeps moving the goalposts on you. When you make your first 100,000, you start dreaming of 1,000,000. At 1,000,000, you want 10. At 10 million, you want recognition and respect. And at recognition, you start craving some form of immortality. It never ends. It's a treadmill powered by envy and fueled by insecurity. If you don't step off that treadmill intentionally and consciously, it will carry you forward until you collapse. Here's the uncomfortable truth that Americans over 40 need to hear clearly. You don't actually need millions to live well. You need clarity. Clarity about what enough looks like specifically for you and your values. But people never define that personal enough point. They just copy the ambitions and anxieties of others around them. That's why they wake up one day with a nice house, an impressive title, and a completely hollow life, with no clear idea how they got there. If you don't know where your enough line is, you'll spend your entire life running past it repeatedly without ever noticing. The trick isn't to accumulate more forever. The trick is to align your money with your psychology. If your expectations grow faster than your investment returns, you'll always feel behind, no matter what your actual balance shows. That's why enough is the ultimate advantage in life. Once you genuinely find it and accept it, nobody can manipulate you anymore. Not the market. Not advertisers. Not politicians. Not your envious neighbors. You stop being part of the anxious herd. You stop trading peace for prestige. The culture hates that idea because it can't sell it profitably. Enough doesn't generate clicks or commission sales. It doesn't make your neighbors jealous. It just makes you calm. And calm doesn't trend on social media. But calm is precisely where wisdom lives and grows. When you no longer need to prove anything to anyone, your brain starts working properly again. You stop chasing status and start observing reality clearly. You see how much stupidity runs the world and how little of it you actually need to participate in. That's a revelation most people never reach because they're too busy refreshing their portfolio balance obsessively. Munger once said that envy is the absolute dumbest of all sins because it's the only one that gives you no pleasure whatsoever. You gain nothing. You just hurt yourself while watching others. But envy drives the entire modern American economy. Entire industries exist solely to make you feel inadequate so you'll buy solutions. The only real antidote is gratitude. Not the fake performative kind you post about online, but the quiet private kind that lets you sit alone with your life and honestly say this is good enough for me. The deep irony is that once you truly feel that genuine contentment, you start making dramatically better decisions. You take fewer stupid risks. You keep more of your wealth. And that wealth compounds quietly in the background because it's not being constantly traded for validation or status. Enough isn't a finish line you cross. It's a philosophy you adopt. It's the precise point where logic finally wins over greed in your psychology. You don't stop improving yourself when you find enough. You stop inflating yourself unnecessarily. You stop trying to outshine people and start trying to outlast them through discipline. And here's what happens next in that transformation. You become essentially impossible for others to control because the person who knows enough can't be bribed with promises of more. That's real freedom. Not yachts or private jets or luxury vacations, but the ability to say no without fear of loss or missing out. The world will call you boring. Let it. Boring people sleep well at night. And sleeping well is the highest dividend that money ever pays. If you want to measure wealth properly, don't count your possessions or your portfolio balance. Count your untroubled hours. Because in the end, that's all the game was ever really about. Your time, your choices, and your peace of mind. Everything else is just decoration. Now here's what most people approaching or living through retirement completely miss. Wealth is genuinely fragile. It takes years of discipline to build and only one catastrophically dumb decision to destroy. The higher you climb financially, the more gravitational force there is to pull you back down. That's why capital preservation isn't some glamorous strategy. It's absolutely sacred. It's the foundation of every fortune that lasts longer than a market cycle. Imagine you have a tree that produces money leaves. Every season it generates 5% new growth. If you protect that tree carefully, nurture it, and leave it alone, it keeps growing forever. But if you start chopping at it impatiently for quick cash, you'll have firewood for a month and profound regret for a lifetime. Most people chop down their financial tree the very moment it starts producing meaningful shade and security. They can't resist spending the yield first, then the principal. They call it enjoying life and rewarding themselves. Munger called it economic suicide with good lighting and pleasant company. Munger and Buffett always believed deeply that the best investors play defense first. They're not trying to get rich fast through brilliant moves. They're trying to avoid being poor again. People forget that's how they both started. Broke, cautious, and deeply allergic to risks they didn't fully understand. Every dollar mattered when they were young. That habit and mindset never left them even when they had billions. The worst investors chase returns obsessively. The best investors chase survival first. They understand that if they can just stay in the game long enough without blowing up, compounding will eventually do the heavy lifting. But you can't compound capital that you've already lost to stupidity or bad timing. That's why they avoided leverage like a plague. Leverage makes you look like a genius until suddenly it doesn't. Then it wipes you out completely, permanently. One bad quarter, one surprise rate increase, and you're done. Munger watched brilliant people borrow their way to bankruptcy repeatedly. They always said the same thing beforehand. This time is different. This time I understand the risks. No, it isn't different. Debt plus ego equals disaster. Always has. Always will. Preserving capital doesn't mean hiding cash fearfully under your mattress. It means structuring your entire financial life so you never have to sell assets in a panic during market crashes. If your living expenses are genuinely low and your patience is genuinely high, you can wait out absolutely any economic storm without permanent damage. That's real power and freedom. Not the ability to predict what markets will do, but the ability to endure whatever they do psychologically. Everyone wants higher returns on their investments. Very few actually deserve them because higher returns require either higher intelligence, higher discipline, or preferably both. Most people don't have sufficient quantities of either quality. That's why Munger preferred boring investments that any reasonable person could understand. Businesses that made intuitive sense. Products that people would still need in 30 years. Balance sheet strong enough to survive a depression. Boring keeps you alive and compounding decade after decade. Excitement makes you broke and filled with regret. Look honestly at all the major bubbles we've lived through if you're over 40. 1999 dot-com mania. 2008 housing collapse. Recent cryptocurrency madness. Each one started with essentially the same story. This time is fundamentally different. Old rules don't apply anymore. It never actually is different. Human nature doesn't evolve nearly as fast as technology changes. Fear and greed are still running the decision-making software in our brains. That's why your main job as an investor isn't to outsmart the market or predict the future. It's to outlast your own worst impulses and emotional reactions. Capital preservation is fundamentally about humility. It's accepting that you're not all-knowing, that black swan events exist and will happen, and that the world doesn't care about your optimism or your plans. When you focus properly on preserving capital, you preserve optionality. The valuable right to act decisively when everyone else is paralyzed by fear and panic. That's how real lasting fortunes are actually built. Not in bull markets when everyone feels like a genius, but in crashes and corrections when cash becomes the most valuable asset on earth. The average person doesn't need complex financial products or sophisticated strategies. They need three simple things. A decent savings rate maintained consistently. A diversified portfolio they actually understand. And the ability to sit still without panicking or chasing trends. That's it. Everything else is just noise sold by people who profit from your confusion and activity. Munger met countless investors over the decades who drowned in unnecessary complexity. They thought diversification meant owning 50 different stocks and funds. It really just means not being dependent on any single outcome, including your own judgment. You can run a genuinely good life on just a few simple rules. Spend less than you earn consistently. Avoid debt like poison. Invest only in things you truly understand. Don't be an idiot or an ass to people. That last rule actually fixes more life problems than compound interest ever will. If your solution to any problem requires elaborate adjectives and complex explanations, it's probably wrong. Good decisions are simple nouns and verbs. Clear, strong, and boring. You want to see the opposite of simplicity? Look at Wall Street during 2008. Thousands of supposedly smart people using exotic terminology for simple greed. Derivatives so mathematically complex that even their creators didn't understand the cascading risks. And when it all inevitably collapsed, they acted genuinely surprised. That's not intelligence. That's arrogance with a calculator and a degree. You can't outsmart basic mathematics. You can only respect it or get destroyed by it. Simplicity in relationships, in daily routine, in diet, these are the true luxuries of age and wisdom. Buffett famously eats like a 6-year-old and reads all day. He's not doing that because he's eccentric. He's doing it because it keeps life simple enough for his brain to focus on what actually matters. Making good decisions and maintaining peace of mind. Munger did the same throughout his long life. They were both deeply allergic to unnecessary complexity. They'd seen firsthand what complexity does to people. It drains focus and energy. It makes you feel busy while accomplishing nothing meaningful. The goal in life isn't to do more things or manage more accounts. It's to need less. You don't need to manage 10 projects or 20 accounts. You need a simple system that runs quietly in the background so you can spend your remaining time thinking, reading, resting, or enjoying relationships. Not fixing mistakes that were born from chaos you created. Here's something funny that Munger noticed. Simplicity looks like laziness to the undisciplined. They mistake calm for weakness. But they forget that the calmest water often hides the greatest depth. Simplicity gives you back your most valuable asset. Attention. And attention, when properly directed over decades, turns into sound judgment. That's the only real edge any investor ever has. People always want more by default. It's built into human DNA. More money, more praise, more recognition, more everything. But more is a disease with no cure, only careful management. You never see anyone overdose on enough. It's always the pursuit of more that eventually kills them financially or psychologically. The world keeps moving your goalposts if you let it. When you make your first 100,000, you start dreaming of 1,000,000. At 1,000,000, you want 10. At 10 million, you want recognition and respect from peers. And at recognition, you start craving some form of immortality or lasting legacy. It never ends naturally. It's a treadmill powered by envy and fueled by insecurity. If you don't step off intentionally and consciously, that treadmill carries you forward until you collapse exhausted. Here's the uncomfortable truth. You don't actually need millions to live well. You need clarity. Clarity about what enough looks like specifically for you, your values, and your actual needs rather than your imagined wants. But people never define that personal enough point clearly. They just copy the ambitions of others around them. That's why they wake up one day with a nice house, an impressive career, and a completely hollow life, with no idea how they got there. If you don't know where enough is for you, you'll spend your entire life running past it without noticing. Munger knew people with 50 million who needed 60. They were functionally poor despite the numbers. He knew people with modest savings and zero anxiety. They were genuinely rich in the ways that matter. The trick is to align your money with your psychology. If your expectations grow faster than your returns, you'll always feel behind, no matter what your actual balance shows. That's why enough is the ultimate advantage. Once you find it and truly accept it, nobody can manipulate you anymore. Not the market. Not advertisers. Not politicians. Not your neighbors. You stop being part of the herd. You stop trading peace for prestige. And calm is precisely where wisdom lives. When you no longer need to prove anything, your brain starts working properly. You stop chasing status and start observing reality. You see how much stupidity runs the world and how little you need to participate in it. Munger said envy is the dumbest sin because it's the only one that gives you no pleasure. You gain nothing. You just hurt yourself. But envy drives our economy. Entire industries exist to make you feel inadequate. The antidote is gratitude. Not the performative kind, but the quiet kind that lets you sit with your life and say this is good enough. The irony is once you feel that, you make better decisions. You take fewer stupid risks. You keep more wealth. And it compounds quietly because it's not being traded for validation. Enough isn't a finish line. It's a philosophy. It's where logic wins over greed. You don't stop improving. You stop inflating yourself. You become impossible to control because someone who knows enough can't be bribed with more. That's real freedom. Not yachts, but the ability to say no without fear. The world will call you boring. Let it. Boring people sleep well. And sleeping well is the highest dividend money pays. If you want to measure wealth properly, don't count possessions. Count your untroubled hours. Because that's all the game was ever about. Your time, your choices, your peace. Everything else is just decoration that eventually needs dusting. The truth about money and life that takes most people decades to learn, if they learn it at all, is heartbreakingly simple. Financial freedom isn't about reaching some magical number that finally makes you feel secure. It's about removing stupidity, controlling expectations, and finding enough. Those three things, sustained over time, will give you more peace than any portfolio balance ever could. And peace, as it turns out, is what we were all chasing anyway. We just confused it with commas in our bank statements. If this approach to money, discipline, and rational thinking resonates with you, consider subscribing to stay connected with financial wisdom that actually works over decades rather than hype that fades with the next market cycle. Because the real game isn't getting rich. It's staying sane, staying rational, and staying free long enough to enjoy what you've built.